brought to you by Michelin Canada. Michelin, a better way forward.
Scott, in previous installments we talked about having two bank accounts and trying to differentiate between what is a business expense, what is a home expense. Sometimes that line can become a little blurry because you have personal vehicles, you might be employing family members. How do you really keep it straight as to what is a business expense and what is a home expense?
People do struggle with that, and one of the, back to for a moment, just thinking about the bank accounts, and bank accounts, of course, we have bank accounts, we have credit cards, we have debt, we have all sorts of things that that become muddled when we have a business. When we're typically a small business, it all becomes one. And again, one of the things that Revenue Canada will challenge you on, if you're claiming all sorts of credit card charges and credit card interest and that kind of thing, again, obviously that adds up to a lot of money as well, or can, lines of credit, etc. Revenue Canada will be very particular with you, and you're proving that this line of credit is indeed from my business, it's not from your personal life. So now again, not all of us can afford the luxury of having two lines of credit and or whatever different, so many credit cards, it's business and personal and everything else. But you have to make an effort to try. I mean, if you can make the Visa be a personal and a MasterCard be the, or whatever, that kind of mentality, you have to try, because they will challenge on it. And when they audit you, and if they're just looking at 2009 or 2010 and that snapshot in time where your line of credit was X amount of dollars and the interest that was charged, that's not good enough for them. I can tell you they're going to look at 2009 as well, because they're going to want to see the history of, you know, great, you had a $15,000 line of credit at the beginning of the year and it's $22,000 at December, but where did that $15,000 come from before? It almost becomes an endless evolving door where and obviously they're sticking their nose in right into your business. So it's important for a basic thing, just with all the interest. Again, another thing that people need to make sure that they're claiming all the interest that they can, and bank charges and service charges and that kind of thing through their business that are valid to be claimed, and then supported properly. The home, I mean, again, most people have their offices in their home, so Revenue Canada does allow a person to claim part of your operating costs of your home in relation to your office. So you have to be, again, diligent about, the best case scenario, of course, is to have a dedicated room, a dedicated space in your house where your office can, there's a desk, there's your computer, there's your filing cabinet, etc. You know, you're going on the internet there to download your pays, dealing with your carrier, you're checking out travel plans and weather, and doing your banking and this kind of thing. If it's in the corner of your living room, family room, whatever, again, it gets to be a weaker argument. Again.
But well, Canada Revenue Agency won't come to your house to inspect this, will they? So how do you prove?
Well, they will. They will. They'll come to inspect it in the sense that when they are doing, if they are auditing you, then they are going to want to come to your place of business to do the audit. So therefore, now they're going to be sitting in your home or in your office and looking around and going, why is there a bed beside this chair here, right? This is obviously a personal space. Depending again on what you've done with it all. If you've claimed a large percentage of your operating costs, well, now you've got to be able to prove that the square footage of this office and how often I use it for business is valid to what you've claimed. If you've claimed a reasonable amount that fits in with what you're really doing, then like anything, you have hopefully nothing to worry about. But if you've gone too far, then that's one thing they're going to catch you on. So you might have to, you know, when the auditor's coming, you might have to all of a sudden be, you know, the week before, get some furniture moved in your house so that things look the way that you want them to look, not the way that you often use them. Now, part of the way to avoid that, though, if you deal with an accounting firm like ourselves, we would always insist that the auditor come to our building. So the auditor's coming into my house, my office. They're not going into my client's place, so they're not going to see that. So unless they were pretty damn adamant about it, they would never get in there to see it, but they're certainly going to ask. So now, are you going to lie to them? Or are you going to tell them the truth? Or again, are you going to move some furniture and take some pictures? Or again, ultimately, you need to set it up properly the way that you want it to be, claim it properly all the way along. But heat, hydro, property taxes, interest on your mortgage, those kind of things. The operating costs of the house are available to be claimed. You got to be careful when you come in terms of, if you built that room that you're now using, that becomes more of a complicated issue and something that people need to stop and think about what they're doing. But that's one more issue between, again, how that personal and business relationship can get convoluted.
Okay. Let's talk about the service vehicle. One of the perceptions is the great benefit of having your own business is that you can expense your personal vehicle in certain times. Is that true, or is that a myth?
No, well, it's true to the point, once again, that yes, the concept of your personal vehicle being used for business, exercises, excursions, trips, etc., is true and a valid concept to expense it. What you have to make sure, again, is that you're doing it at the right rate. What is not true is just because, many times I hear it every year, people say, well, I leased my vehicle so I can expense the whole thing. No, that's not true. Or it's a pickup truck so I can claim it all. No, that's not true. And as I've written in our columns many times and talked to clients, Revenue Canada has never or would never today audit a small business without asking questions about your service vehicle. They are absolutely guaranteed going to look at it. They are absolutely guaranteed going to want to see all of the receipts that you've got to support your gas, your fuel, your insurance, your repairs, etc. And they are absolutely going to want to see you produce some sort of logbook or journal that justifies the fact that you 15%, 50%, 100%, whatever that you've claimed, are able to prove that you've used it for business.
So you can ballpark this. You actually have to document all your business usage as well as your personal usage?
Absolutely. They're going to want to see something that shows, and I often use the word logbook, but I guess it's better to use it. A journal is probably the better term to use. A journal that shows January 1, my odometer reading said this, and at January 31st it was this, and in between they're going to write you to have written down all of your business trips. In a perfect world, both business and personal, but for sure all your business trips. So every time, again, you went to the carrier, you went to the bank, you went to see your accountant, you went to an industry seminar, whatever that you did, Joe's Garage to get the oil, to pick up the truck, that kind of thing. They want that documented down there. They want the date and the total amount of kilometers that the trip was for them to see.
And if you haven't done that and CRA demands it, what happens then? Do you lose everything that you're trying to claim?
You certainly can. Again, that comes back to that comes back to the flavor of the soup. That comes back to the relationship that you built with the auditor. If the auditor has been going through your books, they are people too. So if you've treated them like crap, you're going to get crap back. If you have pushed the limit on many numerous things that they see in their review of your books, or your books are just a travesty, well then they're not going to have any patience for you. That said, if your books are in good shape, you've got all your receipts there and everything is, in good shape, then they're going to treat, and you've treated them with that respect, and they see that you're giving an effort, likely, because it's guarantees, because if they want to be a jerk about it, then they will be a jerk about it. But for the most part, if they see that all of your other bookwork is rock solid, and this one thing is that you've pushed it, now again, if you've pushed it a little bit, they might just say forget it. You might get the old, don't do that again, push it back to here, and off you go. Or if you've just gone off the charts with claiming it all, well then they might slap your hands a little bit. But I tell you, if your entire body of books is a joke, then you're going to get no breaks from them whatsoever. There's going to be no sympathy. The expectation is, when you're a self-employed business person, you are going to make an effort to take the time, the care and control of your books and records. You've got bank statements and deposit records, and you can explain everything. If it's a joke, you're going to get hammered back. So the flavor of the soup will dictate. But for sure, if you're claiming 100% of a pickup truck and all the gas and insurance, and if you've got nothing written down to support all that money that you've paid out on that claim, again, pickup truck or whatever that it is, I don't see you getting it. They are absolutely going to cut it in half. They're going to cut it back someplace. without you really scrambling and come up with some sort of records, they're going to cut it back. And then it's again, you're talking about, so you got to pay back the taxes on that amount of money, all the GST and HST that you've claimed, any of those expenses you'll be paying back to them. They love to add interest on all that stuff, so there's going to be interest. And of course, it may be for 1 year, or it might be for 2 years. So it can be enough. And again, it's worth, at the outset, making sure that you're educated and instructed properly by an advisor, so that you make the right decision on how much to claim, and then you do everything you can to make sure that you're proving that that deduction amount you're using is proper.
So the theme we keep hearing throughout this series is that good record keeping now will save you a lot of headaches down the road.